But while the US dollar edged lower in early trade, giving back some of its sharp overnight gains, which were prompted by continuing concerns about an economic slowdown and the health of the US banking system. For more on this, we're now joined by SABC Markets presenter Nastassia Arendse. Nastassia, thank you so much for your time in studio to unpack all of these financial matters for us. Let's start here. What is a dollar index and what does it tell investors?
So the dollar index is used as a measure to value the dollar against the basket of 6 major currencies. So here we're talking about the euro, the pound, the Japanese yen, the Canadian dollar, the Swiss franc, as well as the Swedish krona. When you look at the index right now, the euro makes up about 58% of the index. So how investors use it is that it generally gives you a sense of the underlying health of the US economy. So some traders will use it to speculate on the value of the dollar or to use it as a hedge if you have currency exposure elsewhere. So how you generally read it, if the dollar index is around 120, that generally means that the dollar is increasing. So basically there's a direct correlation. A higher dollar index means a higher dollar. If the index is around 80, it means we've got currency depreciation.
All right. Then speak to us. What is the market consensus then on, the dollar's performance?
So, if you look at 2021 to 2022, we saw the dollar appreciate quite significantly, gaining about 17% against those basket of currencies that I just mentioned. So right now, it appears as though the dollar seems to be floundering, and that is on the back of less aggressive central bank monetary policy. I've mentioned a few times that we saw high interest rates in the US, and that created concerns around the regional smaller US banks because we were starting to see a little bit of pressure on that front. For the near-term outlook, it does appear tough because, as we mentioned, we've got less aggressive policy. But the reason we saw that appreciation of 17% in that 2021 to 2022 period is that we were dealing with an uncertain economy in the US, as well as a central bank that is determined to fight inflation. So consensus right now is that we're floundering, but we're going to put a chart on screen for the viewers just to see what the year-to-date performance of the US dollar index has been, at least for the past few months. So as you can see, that is where it's at. It's around 101.42. And as I mentioned, the way you read it, 120 means we've got a dollar that is gaining in strength. And when we get to 80, we've got that depreciation. So we're currently sitting at around 101.42, which is giving the market an impression that dollar peak or dollar strength is starting to wane.
All right, now speak to us about the drivers, for the US dollar. What will they be?
So at this point, it seems as though those drivers are slowing down. Again, we're talking about a US Fed that is trying to fight inflation. But you want to get to a point where you're fighting inflation, but you're not breaking the economy. So the consensus amongst the traders is that at the next US Federal Reserve meeting, which is happening on May 3rd, we'll see a 25 basis point increase. At that point, from November onwards, we'll start to see a decrease, or at least start to see cuts in interest rates. So for now, in terms of the dollar performance, it's a wait and see, but we've basically accepted that perhaps peak dollar is actually not a thing anymore.
All right, as we wrap up, just give us an update on how local and global markets are currently holding up.
So global markets right now are moving in opposite direction, and the part of that has to do with that yesterday we saw results from First National Bank in the United States. It's one of those regional banks that we were watching. A couple of months ago, we saw the collapse of Silicon Valley Bank as well as Signature Bank. So everyone was watching this particular bank to see how is it performing against these high interest rates. What was concerning is that they saw their deposits drop by 100 billion rand, which is actually quite significant. So that is adding to that pressure. And especially when we look at what's happening from a European as well as the JSE, we are actually quite lower. And we're low because the resources and the financials are also pulling back. There is a little bit of green, but we're kind of low right now when you look at the JSE.
Nastassia, thank you so much for your time this afternoon. Nastassia Arendse, my colleague there, SABC Markets presenter. Of course, this will be a feature daily here on SA Today.